Good evening, ladies and gentlemen. Welcome to Walk the Block, where we are navigating digital finance all together. Tonight's big headline story is, yes, the Bitcoin price is going down, but where do we get off this elevator ride? Or rather, question is, what support level or price level are we realistically getting off at? Additionally, we got a bit of a video from Tom Lee that we want to break down with all you guys, talking about one of the biggest visionaries and honestly largest players in the game when it comes to Ethereum and all of that. And to round it out tonight, we do have some preliminary results from a primary in Texas. So odds are none of us really care about that. But the thing we do care about is that it appears crypto is actually becoming a bit of a game changer when it comes to politics. Yes, I know you may not care about politics, but guess what? Politics cares a whole lot about you, trying to get you to do what it wants. So we will be covering that. Anyways, I am your host, Zenith, here for the evening, and I'm joined by my excellent co-host, as always, Tracker. How you doing, buddy?
Doing well, man. Doing well. Looking to get into this, man. I know today was a little bit turbulence for people. People keep thinking like this is, everyone's holding on because it's like we're at this pivotal moment in the market. Now, are we gonna? Is this the next leg down? Are we gonna find support? We'll dive into that.
True. Speaking of which, let's get right into it with the charts. All right, what do we got going on? Okie doke. Looking at the Bitcoin price, and let's zoom in a little bit. So, currently, we're on a bit of a down streak, if you will. Pretty much for the last 2 weeks now, price has been going down. We had a bit of a 1 week little period there where we kind of chopped sideways. But the big important thing about that week is that this one red candle here broke through this nice orange line. That orange line is our 50-day moving average. And, well, we didn't get back above the yellow line, which is our 20-day moving average, but those two lines themselves are actually having a bit of an interesting thing happening, which is we're about to get a cross. The crosses typically show a trend reversal when it comes to certain areas, but in this case, we didn't get both of these to go back over our 200-day moving average indicator, which would have been a much bigger cross. So smaller sized event, but still an interesting one nonetheless. If you've been following us for the last couple of weeks, you've been knowing that we've been saying this is actually a kind of exciting time to be in crypto, or at least paying attention to what's going on. The reason being for it is that we have stayed above our 20-day moving average for a hot minute here, pretty much since early April. And well, we're almost finishing out May now. So that means is that our short-term indicator was telling us they were being very bullish. Well, we got so bullish, we went all the way back up to our 200-day moving day average indicator. That is our long-term indicator. And we retested it like 3 different times, which is interesting to see because it's showing that price wants to move higher, but seeing what the overall trend on the long term is going to do to it, said that, nope, that's about as high as you go for this one. And if you're a big fan of 60-day cycles like I am, it shows that Bitcoin moves in these 60-day cycles. Pretty much every 60 days, you have a cycle low. And then in between, price will go up, find a cycle high, and then where that high falls on the left or right side of the midway point, which would be day 30, kind of indicates how the rest of the cycle is going to go. So in our case, we had a high on day 38, I want to say. Yes, still got that going on. And in which case, we are now on day 61, but we actually have a potential candidate for a 60-day cycle low. I personally happen to don't think it's the true end of the 60-day cycle, even though it does fall directly on day 60, which is kind of funny. But the reason that I say that is that price over the last 24 hours got all the way down to $72,500. This is coming off of our time that we spent up right here around 78 before coming back down here. The reason that I say I don't think this is actually the cycle low is that, well, there's not a whole lot of other data going on here. Specifically, I'm looking for support and resistance levels to say where we could end up next. The one previous was right here at about 74,000, realistically 73,700-ish. And the next one below that I'm looking at is about 70,500. 72.5 was not anywhere in my cards, which leads me to believe that it's not really a place we're going to stay. As you can see, prices already recovered a little bit up to the mid-high 73s, but overall, trying to figure out what's going on, I happen to think that we're probably going down a little bit more to close out the cycle. Granted, could be the classic one of the hand is worth two in the bush kind of thing because we already have the candidate. It's already printed on the chart. But granted, this has happened within the last 24 hours. So it's possible. I don't think it's likely, but the overall trend of the last 2 weeks is that, yes, we've tried to retest our long-term moving average, got rejected multiple times, tried to stay above our short-term average, fell below that one, tested our medium one, failed, and now we're back below through it. So because of that, it shows me that right now the trend is definitely towards the downside, especially in the short term, because we are below our short term one, indicating that, yeah, odds are we're going to continue that direction for a little bit. And because of that, and conjunction with our day 38 cycle high, which tells me on average, the probability of having a cycle longer than 60 days is more probable. So that's what I'm looking at here. Tracker, what are you seeing? Anything else going on with the markets?
Well, before I move on to that, okay, so let's say it is an extended 60-day cycle. What's a candidate for how many days in the cycle are you looking at? Before you're like, okay, obviously it's 60 days, or what are you looking for?
So based on the nerdy math that I've done, I've created a bit of a bell curve. Right at 60 days, or honestly like a half day shorter than 60, is 59.5 is your average. My first standard deviation goes out about 9 days. So that takes us to about like day 68 to 69. So realistically, like in the totality of circumstances, 34% of all cycles, or in this case, of all extended cycles, 68% will fall within this range. So it's a high probability, in my personal opinion, that we are going to see this happen sometime before June 5th, which that's pretty much before next weekend, effectively. That's the timeline that I'm looking at. There's a lower probability that it could extend even farther, but I think that in this case is even less likely than my general probabilities, because this is a pretty even cycle. The general shape is that we went up and now we're coming down, and it's very neutral or middling. So it's kind of just like a nice parabola. So what I'm looking at is to see, where do we stop on the way down? Do we stop at this 70,000 level, or do we go all the way down to the cycle low of 65,000? Both of those are possibilities. One of the things that I was looking at is for our Fibonacci retracements, going from bottom of the previous, or actually tell you what, we'll pull it here. Looking at this one, if we go from the start of the cycle, it appears that 71.2 is our 618 level. 73.3 was our 0.5 level, but we've already broken through that a little bit. Things below that is going to be 68.4. But again, looking at this cycle alone, there's not a whole lot of confluence for it. If we extend it just a little further to include the last cycle of when we had our cycle low all the way down at 60,000, then this 70,500 level comes very much back into play for our 0.5 Fibonacci level. So time-wise, what I'm looking at is sometime in the next week. Price-wise, I'm looking at that 70,500 level. I think if I had to put some money on it, I think that's where it's going to end. Granted, is that a little hopeful? Yeah, it's a little hopeful, but I think that the end of this cycle will be higher than the start of the cycle, because we've had a pretty bullish cycle. And by the way, shout out to one of the guys from last week. He was saying, kind of looks like a bit of a relief rally. And look, that is a very real possibility. But at the same time, the price has done what it's done. So time-wise, next 7 days, maybe 7 days exactly. And then as far as price, 70,500, that's where I'm putting my money. Anything below that, we're looking at retesting this 65,000 level, which would be even more of an aggressive drop. So we'll have to wait and see. Does that answer your question?
It does. I don't think anybody's. I'm going to say, I'm going to go on a limb here. I don't think the institutions are going to allow it to get down to 50, 40,000. Everybody's thinking, because everybody on the sun thinking they're going to snap it at 40 and 50. Everyone's thinking the same thing. I just don't think it's going to get down there. And if it does, you better be quick on the trigger. Have
Yeah, I think I'm right there with you. When we had our major drop from the 90s all the way down to this 60,000 level right here, the volume on this one is what really speaks out to me. This is on the daily chart, by the way. Because it got bought up so aggressively at this level, it tells me that there is a good amount of support here. So to break through that level, I think he's going to take a major event. And as it stands right now, I don't see any major events happening. Granted, I think the biggest rumor mill thing happening right now is that there's a talk about knocking down the the dictatorship of Cuba. But in the global scheme of things, Cuba doesn't really have that big of an impact in the world.
It's not. No, it's not. And matter of fact, I mean, even when we went into the war and everything, the overall markets don't seem to be scared by any of this. They're running.
No.
They're running hard. Matter of fact, the overall market indices are dragging crypto along, and crypto is just stubborn. Doesn't seem to want to go. Thus, I go back to what I'm saying. I think the suppression is still on crypto, and it's going to be that way until it gets some we get through. Ideally, now people might be thinking the Clarity Act might be a sell the news event, but here's the thing: if that gets passed, that's going to speed everything up, and I don't think you're going to get the momentum in crypto until that actually gets passed, because that's holding everything up. Like I just don't think that is what institutions are looking at. That's what's holding up the holding up train. Now, if you break it down, institutions control, I don't know, somewhere in the ballpark of 10 to 15%, maybe 20% of the market, but still retail still owns a ton, majority of the crypto out there. So they're all waiting. If everyone's waiting for this to pull back, and the more and more you hear it, more and more people are waiting for these pullback levels. I just don't know if you're going to get there, because that's the other thing. If you go look at the 200-day weekly moving average, do you have that on the chart? Can you bring that up? Because that's going to show you everything you need to know. The 200 weekly moving average has been basically the support for Bitcoin going all the way back until since it became in existence back in 2015. Now we went under the 200 weekly moving average during the the FTX debacle in the late 2022, and then in the Q1 of 2021 we finally started trying to break back above it. That's the only time we've been under the 200 weekly moving average. And right now, where is the 200 weekly moving average? If you got down to it, you might see 61. Right now, it's at 61, 62,000. That's where you're at. So do we go much lower than that? I'm not saying we even get that low. I think, it's going to have to get through. There's a lot of point of control around this 70,000. Like, we got to get through that. If you break through 70,000 and then you're going to go down, the question is like, yeah, exactly. What's going to cause the dump? What's going to cause the next leg down?
For sure. I think you raised a really good point there. The 200-week moving average is a ridiculously strong support level. The only times that we really get down below that is like what we're talking about, which is like true bear market lows. And we don't really remember this one right here. This is the COVID dip, actually. And then even in the true bear market, we just barely touched it twice. And this is back in the after the 2017 cycle going into the 2021 cycle. And in order to get down to that level, I think you need a big driver. Like either you truly need the massive sell-off of the markets, or you need a massive news event to do that kind of thing. And as it stands right now, the only thing I can do that is a black swan event. And by what I'm looking at when it comes to the overall markets, we're looking at some pretty blue skies. The VIX is down, S&P 500 still making new all-time highs. Conflict is kind of cooling down across the world. Granted, there is still unresolved issues with the Strait of Hormuz and Iran, but at the same time, we've seen the market's already factored that in. The market says that is largely over, or it's largely over affecting prices. Granted, oil is still up, but at the same time, it's like that's one thing that's mainly affected by that strait. So crypto shows that it's actually been pretty resilient to that. So again, it's going to take a big black swan event. And like you said, we're currently sitting at 61,000 and change, going back below 60K. That's going to take a lot of effort.
Well, not just that, you're going to need big volume to come in here too, because when you get a change in direction, there's typically you'll get a massive red candle on a direction, just like you'll see a major green candle on the inverse too. That typically, when you see these massive candles, that's typically when you're going to get capitulation. That's when you start to get it. Now, does the candidate that happened on, I don't know, beginning of February, does that account for one? To me, that's still not a really big enough candle to maybe put in a floor to have a capitulation. And I think there's too many people that are on the fence right now. And honestly, you could flip a coin. I think, could we go lower? We could go lower. Could we find support here and grind like we did back in 2022 sideways and just keep grinding, up and to the right slowly, but putting in a bottom? We could do that. I think a lot of people who are bearish are thinking like, hey, this is just the next leg down because it's mirroring what happened in basically Q4 of last year. And maybe so. Me, I'm not betting on that. And I'm not trying to get too cute with it. Like I've said, my time horizon's much longer. And that's why, I loaded into more stuff today because I saw the pullback. Now, it's Ethereum. It's just Ethereum. It wasn't like I'm going out there chasing altcoins. I think right now chasing any altcoins now is reckless. I'd say Bitcoin, Ethereum, you can start moving into those. Some of the other maybe large market caps, if you've got conviction on them, sure, you can move into some of those. I see large market cap. I'm thinking top 20. something in the top 20 if you're looking to get into it. I think if you're sitting here all in dry powder waiting for this thing to get down to 40 or 50 after a big low drop, like I know we've talked about this many times. We've dropped. So Bitcoin dropped from, where were we at on the peak here? We've dropped to 126 and it got down as low as 60. Honestly, if people weren't throwing dry powder on that 60 print that day of when we dropped down in that area, or even when we went sideways and tried to consolidate, I don't know what else you're waiting on. I mean, if you're trying to pick the bottom, like I said, I think you're playing a dangerous game. But yeah, I can see the 60-day cycle extending out and maybe getting a little lower. I still think that 70,000 psychological level, or even the upper 60s, like you've got a really strong point of control between 60, we'll say 65,000 and 70. Yeah, we'll say 7,500. So it's between 70 and we'll say 66 to 70. There's a strong point of control right there. And I bet you if you bring on the fixed volume, you're going to see massive volume at that level. And then if you were to zoom out, you're still going to get a lot of volume there at that level, because that goes all the way back when we went sideways for a whole year during 2024. We went sideways during that time. So there's a lot of built up volume at that level and the level we're at now. So there's a lot of people there that are either still holding, because they didn't get out at the top when, the top was happening back in, 2025. But hey, that's how I'm looking at it as. I just think everybody's expecting everything to drop. And I think if you haven't started deploying, I don't know what you're waiting on. If you're 100% on the sideline of dry powder, man, I don't say.
I'll
Kudos for,
try to
and if you
build.
pick the top, kudos. I mean, you pick the top, you're doing really well. You're doing very well, because you've got so much dry powder. I just think that if your time horizon is years out, then I don't know what you're waiting on. That's all I'm saying.
I think the best possible case I could build for that argument is that we have not. It's based entirely on 4-year cycle theory, saying that based on the time, we're not
Sure.
even close to the time yet. Based
Sure.
on the price, there's still ways to go.
Sure.
And if you want to get even more technical with it, you could even argue that there is Elliott wave impulses suggesting that we are not complete yet, and that
Sure.
something like this could happen.
Mhm.
And we could see that final leg down. But
Mhm.
again, this is actually a bit of a counterpoint to the case I'm trying to build here, which is that if you're truly looking for that cycle low, what that indicates is that you're also trying to build it on time. And just based on time right now, even if we try to drag it out a little bit, we're looking at like September, October, and that is a long fall all the way down with many levels that people are going to be happy to buy up the price at.
Yeah, I'll
So
actually add to that on that. I'm looking at more as, probably around beginning of October is the early cycle low. And then you'd have to go in towards, end of November around Thanksgiving time to get the late cycle low.
yeah,
That's a long time to wait on the sideline. And I'm gonna tell you now, if I'm not saying it's gonna get passed, because I think there's a lot of ground it has to cover for the Clarity Act to get passed, hell, even this year.
yeah.
But if it were to magically get passed in July, your low's in. I feel like the lows are in, and I think you're going to see at least a sideways grind, or you're going to have more to the upside. That's all I'm going to state.
That's true. And including this bearish case that we're trying to build here, I think the biggest losers in this case are altcoins. Because if you do
Oh
believe that we
yeah,
have another like
absolutely.
10, 15, 20K to go down on Bitcoin, your
Mm-hmm.
altcoins are going to bleed even more, especially considering the fact that they're most likely bleeding or at least just kind of chopping to the right during this entire time when we're
Mm-hmm.
not seeing action. We're not seeing the market heat up. We're not seeing rotation or anything. It's just people trying to get in on lows, not knowing where the bottom is going to be at, or not even knowing what's truly going to be relevant in this next cycle. So, if this is the case, altcoins are definitely the most dangerous game. When it comes to the L1s, we've seen that the L1s do typically move first. So, like, it's the least downside. And if you are truly bearish in that case, then yeah, dry powder it's a play, but being 100% dry powder does give you the risk of this potentially being something different. So instead of being that 1, 2, 3, 4, 5, this could actually start to be the beginning of something bigger.
Well, let me also put it in perspective for people, at least on my personal viewpoint of why I'm doing what I'm doing. I was forced to liquidate things because I needed to take action personally. And that got me out, towards one of the East high, not what happened in 2025, but what happened towards the end or the beginning of 2025. I had to take action. So I liquidated, a good chunk because I had to. So I'm sitting on a lot of dry powder. So I'm just deploying that. I'm just moving all that stuff back in based off of, loans and stuff. I'm moving it back in as things are coming back. So I'm essentially created dry powder, a consistent income of dry powder where I'm just redeploying it in, and I'm not going to sit here and just wait with it. I'm going to keep moving it in. What I'm saying is, personally, I would not feel comfortable at least having at least a 30-year portfolio in crypto. I think if you're 100% on sidelines, you're playing a dangerous game. That's all I'm stating here. A risk management's what I'm saying, and I'm saying risk to the upside down because the sentiment's so bad in crypto. Like it is so bad. Everything else is going up. We've got crypto's going down. I mean, gold had a huge run. It had it done in 45 years. Here's crypto on the sideline. So what I'm saying is it feels bad. It feels really bad to be even touching crypto or even looking at it. But hey, when things are horrible, that's when you want to be buying it up. That's all I'm saying.
That's true. Your point's entirely correct, and we've talked about that probably for the last like 4 months at this point, which is that the sentiment of crypto has just been absolutely in the dumps. Granted, sentiment is a soft indicator; it's not really a hard number, but being so low for so long, it does ask the question: how much lower can it get? And with the things that are on the table right now, if the Clarity Act gets passed, I honestly don't see it going much lower. And by the way, shout out to our buddy Centurion 54X. He says, seems more and more unlikely we'll get to buy Bitcoin under 40K. And to that, I completely agree.
Correct.
Especially considering we're looking at this 200.
The 200 weekly, I'm telling you, the 200 weekly moving average. It gets to a point where something is just ridiculously cheap. And here's the other thing. Whether the Clarity Act gets passed or not, everybody knows that crypto and AI is a marriage. That's a perfect marriage. And they need to do this because it's going to make everything much more liquid with tokenization and what's going on. Like the institutions get it. They all understand it. Now that they've had a time to digest this and they have explained to them, they're all very bullish on it. Larry Fink from BlackRock, the one that's been the biggest one, its proponent's been pushing back. Now Jamie Dimon's bullish on it as far as what it could do. So all of them are getting excited because they're starting to, they've had it explained to them that basically this is going to cut out a lot of red tape and a lot of just extra hoops out. It's going to streamline your entire financial institutions and give you more products to move things quicker and faster. Thus, transactions going up, thus, making things more liquid, be able to move quickly, and do it within clicks instead of having to wait for all this stuff to get digested and done. It's going to, and moving through bankers, the derivatives market, which moves like it's basically on steroids. I'm looking at you, Hyperliquid. I know I'm even just saying, like all of these products that we already talked about, it's going to speed it up. They're starting to understand it. And I guess what I'm looking at here, and I'll go back to the analogy I always do. Crypto to me has already gotten through its .com bubble event. Things have exploded. We had meme coins going all over the place, just like when, all these rugs were happening. Well, you had a lot of rugs during the .com bubble. You had a lot of big money being thrown at stuff that was getting blown up and wasted. And it was just tons of money. It was lost during that. But what came out of it was Web 2.0. And this is where we are now. We're starting to really come out and start Web 3.0. Is where we're coming into it. Some will say 3.5, bleeding into, quantum or whatever. But what I'm stating here is this is the structural foundation for what's coming. And if you had a chance to invest in the internet back then, you did very well for yourself. Now you're at the cusp of investing in crypto, that the structural foundation, the narratives haven't changed. It's just, you might need to change your time horizon because everybody was so drunk on altcoins and meme coins and doing crazy trades and just being able to get those quick, 10, 20X's, just knocking them out left and right. It's like those days might be over because, hey, TradFi is now here at the party. And now they're suppressed, and they can easily just say, you know what, all we got to do, if we suppress Ethereum, it'll almost neutralize everything else across the market. That's my, I'll put my my foil hat on for that one. But, I'm looking at, I'm looking at Jane Street, right? Right. I'm looking at them. There's a video we're going to look at here on Tom Lane. He's going to go over some of the big financial institutions that were never even heard of. And now they're competing with the big boys, with employees that are minuscule in overhead that these other big financial institutions have. So if you suppress Ethereum or you manipulate it, and let's be clear here, if anybody who's been doing any leverage trading, you know the market's been rigged. Come on, you know it's been. People are getting liquidated shorts and long positions, and then the price just finds its way back to the medium again, and nothing's really changed except that people just got liquidated. So that's the name of the game right now, is liquidating people, and they're making a killing doing this.
True.
And you'll see what the revenue.
I think you are so right, to the point that people have actually started to lose interest in trying to do anything other than the Bitcoin options, because Solana, their open interest dumped 30%. That is not a small amount. So people are,
well, let's be clear here with Solana. I mean, it was the wild west for meme coins. I mean, that's where
True.
everybody went. And you can look at the Trump administration. I mean, they're the ones that that really got it going, right? With World Liberty Finance and the meme coins that they put out, that kind of triggered it. And maybe not triggered, but that's what really brought all the eyeballs to Solana. And then all the meme coins came out, and the rugs just happened. And honestly, if you were a quick trader that could just, if you could pepper across these things, I don't know, $50 and about 20 of them that you think are going to hit, and only 1 or 2 hits, man, you're doing great. You're doing fantastic. But when I mean quick trades, you're in there, shoot, less than maybe a few hours, you're getting the pumps and you're out. And then you might want to leave a little powder on in case it goes parabolic and does like a crazy, 1000x or something, then you might want to take the rest. But so it was a wild west in Solana. Solana is basically, that environment had turned off. I look at Solana as probably being one of the biggest reasons why retail is just disgusted with crypto, because of how many rugs that took place. So yeah, I'm not surprised with Solana at all. They've got that's a dirty taste in a lot of people's mouths that were just coming to crypto. It's like, hey, what's this crypto thing? And then they lose everything. It reminds me of the South Park episode where one of them was going to invest his money. It was like, and it's gone.
And it's gone.
So anyhow,
wild stuff. Tell you what, you already gave us the tease for the next little bit here, so let's go ahead and pull that up. We have one of the oracles of oracles, or one of the oracles of all time, if you will. I'm not saying good or bad, that's up to you. But good old Tom Lee. We have a clip here, so we're going to be breaking down the video. I believe, Tracker, you said this is kind of like a quarterly statement from Tom Lee for the.
It felt that way. I can't say that or not. It felt like it was more of an update for investors for BitMine itself. That's how the presentation and PowerPoint presentation appeared to me, at least. But it's a lot of great information. This just recently came out, so this is one of his latest information that he's spoken about. What I like about it is I think it kind of puts things more in perspective of what everybody needs to be looking at, and not looking at it like what's going on this year, what's going on, but the time horizon of what they're looking at and things that are happening. I keep this in mind. I mean, obviously, he's going to try to make it BitMine and Ethereum look like the greatest thing in the world, because he's bet probably most of his entire career on it. Now,
yeah, that is the grain of salt we take with all Tom Lee tips.
Yeah, now keep this in mind. Tom Lee's a genius in the traditional finance. Like, he is the kind of thing, like when he talks, everybody needs to shut up and listen. And that's how his track record had been. Very similar to kind of how Cathie Wood does. They would do a lot of unorthodox trades. And I remember Tom Lee being on Fast Money back in, I want to say, was it 19? No, I'm sorry. It was 2000. It was like 2017. I think it was 2007, 2018. I don't know. It might be wrong, 2019. But I remember him being on Fast Money, and he was like, you want to be owning Bitcoin, you want to be loading up the truck right now with Bitcoin, you want to get as much as you can get. And he was spot on with that trade. And now he's looking at this because he's looking at tokenization. He's looking at their AI and RWAs, real world asset tokenization is what I'm referring to. So yeah, we're going to dive into it and get into it. I just wanted to kind of give everybody a background, like, why he's such an intelligent person and why he seems to be on point on this. Now, here's the other thing. The contrarians will be like, yeah, that's cool and all. And I'll agree with what Tom Lee says, but it doesn't mean we might have a bottom in this drop. We might still go down to the cycle low. And that's fair to say. I just think that, people are in crypto that have gotten so, like I said, hooked on the on all this fast money that you need to almost like slow down, because even with crypto slowing down and looking at more a year, 2 year horizon, or maybe 3 or 4 or 5, whatever that time horizon is for you, that it's still going to move dramatically fast. And keep in mind, we talked about it last week. I've been doing tons of research trying to find out what the heck is out there. Are there any other investment, anything going on out there? And still, crypto still is a huge opportunity in investing, even though it doesn't feel like it now. It feels like we're getting killed. But once again, I'll go back to the narrative. Everybody was losing their shirts when they were in the dot-com bubble, but the stuff that came out of the rebel during that are the companies that control most of the S&P 500 now. So keep it in mind.
True.
All right, let's kick it off.
Let's do it.
Hi there, this is Tom Lee. I'm the chairman of BitMine Immersion Technologies, and this is our chairman's message for the month of May 2026. I want to talk about Crypto Spring and why I believe Ethereum is the future of money. There are some disclaimers. So let's start with why I believe Crypto Spring is here. I know that many of you believe we're still in the fog of war, and it is indeed true. The US is in the midst of a conflict with Iran. But what you have to focus on is that Ethereum has now risen for 3 months consecutively. And in fact, if Ethereum closes May,
I will take a moment real quick. Okay.
Yeah, it didn't. It hasn't closed 3 months. Exactly. Yep,
okay,
absolutely.
we'll continue.
Above 2100, that would be the third consecutive month. As I'm highlighting here, there's never been a crypto winter where Ethereum has closed up 3 consecutive months in a row. In other words, the fact that we're up 3 months in a row means crypto winter is over. Another way to think of this is to look at software stocks and Ethereum. Both have been highly correlated to each other. And as you can see, software stocks have risen along with Ethereum. In fact, at Fund
so pause that there. That is something that a lot of people don't. There are some people that have been following that have been spot on this, but yes, crypto does trade with the software itself, which is interesting. Yes, obviously that didn't age well, but this came out. The fact that 3 months. So we're not getting a 3 months straight. So yeah, so it's off the table. Like we're not out of the woods. Let's just make it really clear. We're not. And I think even if that was the case, I still wouldn't necessarily say that that's out of the woods here as far as like the bottom is in. So I think that's, I'm not looking too much into that. But let's go ahead and keep going.
Alrighty.
Among our top sector picks as of May 1. So that gets us to some facts that Ethereum is the best performing asset since the start of the Iran war. It's performing as a wartime store of value. And here's the thing. It's been a great diversification tool since 2016. Take a look at this first column that's highlighted. Let's look at different allocations you could have done in terms of owning Ethereum on December 31, 2016, from 0% all the way to 33%. And these are the starting dollar values. So if you had $100,000,
you can skip this one. Skip this chart
Ethereum,
here. All he's saying is
$5,000.
He's saying the same thing that we all know. Yes. If we had $1,000 that had invested in Ethereum, we'd be looking really good right now when it first started. Yeah, I get it. Duh. Now this chart is really interesting here. What he's showing you here is, so what they're looking at is the ETH to BTC ratio, which is the top. See that top row? So he's saying like, if
of each asset, would you need
you can play it. You can play that if you
yourself against a 50% decline in the S&P 500. Okay, so this is the required hedge. You would need just 0.4% 10 years ago in Ethereum to protect yourself against basically a wipeout in the stock market. Gold, which is considered a store value, you'd have to have 37% of your portfolio. So you can see the point here. You'd want to own just a small piece of Ethereum as a source of diversification and as a hedge. Now, Ethereum does track Bitcoin, so I think you should look at the price ratio. And the current price ratio is below not only the 8-year average, but the 2021 high at 0.087. And you've seen this chart from us before.
Yeah, be clear though here. Like the ratio right now, we're down to 0.027 on the ETH to BTC ratio. So it dropped again. So when all this stuff came out, yeah, Ethereum was looking a little bit better, but those ratios are nowhere near what it was. Like what he was showing you was, I think it was already at 0.03. We're down at 0.027 now. So we've already dropped a little bit here in the whole ratio itself, ETH to BTC ratio. The other thing was, if you looked at it now, ETH to BTC ratio for whatever, it held up better today on the dump. So maybe it's getting exacerbated. Maybe it's kind of overdone. Who knows? We'll see. But Go to the next chart where he's showing you like this next one. Just pause it on the, just go back to the video and let's hold it. Because I want people to understand what he's showing you. So what's going on is the ETH to BTC ratio is that top row is what he's showing you. And what keep jumping around. You need to go back.
That
Go back to that chart. Yeah, that chart right there. All right, sit there. So yeah, this right here. So you see the ETH to BTC ratio. So what he's saying is the average is normally 0.479, which is great and all. And the high in 2021 was 0.087. So what he's implying is if ETH's payment rails, so if this thing gets happening where, the payment rails, they're forecasting, you could see basically the ETH to BTC ratio go up to a quarter, 0.25, which would be monstrous. Now, is that going to happen? I don't know, man. I don't know about that, but I'm looking more attractive to what could happen if we got, say, at 0.05 or 0.06. That would be pretty impressive. And we wouldn't even be near the high, which is 8.807. And you can see where the ETH price would fall based on if Bitcoin got to $250,000, Ethereum sit at $12,000 or $22,000 for ETH. That's a substantial amount of jump. Now I get the payment system rails and all that stuff, and that's great and all, but I just wanted to put that in perspective of what this chart is, because when I was watching, it wasn't very clear how to read it. So go ahead and let it play.
fair.
Chart from us before. If Bitcoin gets to 250,000, which we think is fair value in the next 12 months, and Ethereum gets to the 8-year average of the price ratio, that's 12,000 Ethereum. That's a lot of upside from here. If it gets to the 2021 high, that's 22,000 Ethereum. Keep in mind, those are two numbers to watch. And if ETH becomes the payment rails of the future, which we believe is the case, that would imply $62,000 Ethereum. So clearly a lot of upside from here. And Ethereum is exiting a long consolidation, something I've talked about before. And you can see this current consolidation is 5 years. But those other consolidations resulted in pretty explosive upside moves. 227 times after the 2016 consolidation, and after the 2020 consolidation of 54x for Ethereum. So I think this next upside is going to be led by tokenization and agentic AI.
All right. So he's, I got to see those.
Agentic AI.
I'm just going to slide that in there. So projecting a 25x on the Ethereum price based on those two things alone. Well, maybe not alone, but they are contributing factors is what he's saying. Tokenization. Yes. I think, Tracker, you and I think we're both big believers in RWAs, or real world assets, aka tokenizing real world things on the blockchain. We've talked about it numerous times, like home ownership, car ownership, all kinds of different stuff, even ownership in companies potentially. We're already seeing shifts with the SEC is actually trying to help Wall Street get on blockchain as soon as possible. Things are in the works as it speaks right now. AI, I think, is going to be I happen to think that we may have realized at least for the next decade, the full potential of AI. We're starting to see layoffs. We're starting to see companies realize that their token spend on AI is now costing more than the employees that they laid off for said AI. And the funny math, I think, is starting to get exposed a little bit. And I don't think we're as close to AGI or the true artificial intelligence as we really think we are. So,
I'll go back to real quick to interrupt you. I don't steal your thunder, you're rolling, but the AI, I can equate AI to .com bubble. AI hasn't popped yet, but it will pop.
Yeah,
it's just,
I'm right there.
It's the amount of loss. It's almost like all the companies moving to cloud. Oh, it's supposed to save us a bunch of money. No, it's not. You're going to spend a lot more money. Is what it's turning out to be. So once again, these trends come and go. Now, I think, like you said, AI is going to be around. It's going to disrupt a ton of things, and it absolutely is. I still think companies are moving too aggressively, too fast to try to stay up with the Joneses, essentially.
Yeah, I'm with you on that one. All right, let's keep it rolling.
So let's talk about the future.
Well, hold on real quick. Pause it.
Elon Musk says,
I will say the 25x is to me, I'm not necessarily looking. I just know that with all this stuff, there's a much more opportunity for Ethereum to do really well We've already stated that most of tokenized assets are all over the Ethereum network, a bunch of it. We'll probably go into that, I'm sure. But there's others that are coming up about. You have Solana. You got now XRP getting tapped on the shoulder to do stuff. So I don't necessarily think it's going to be all Ethereum. There will be other pockets where they will tokenize, which then leads to the next problem. Well, if everything's tokenized, how are they going to be interoperable if they're all tokenized on different networks? Now, maybe chain link and things like that come into play to maybe start tying it all together, but that's going to be the next hurdle they're going to have if everything's not centralized, essentially. So just keep that in mind. There will be other competition, not just Ethereum's got a green light here, and certainly the Ethereum Foundation isn't doing anybody any favors, and neither is Vitalik.
Not even themselves. Oh no.
Something pretty profound recently. He says that this future system won't use dollars as currency, just mass and energy. What he's really referring to is that compute and energy are the two scarce assets. In fact, Larry Fink of BlackRock believes that compute will actually become a new asset class and that we'll be buying futures of compute. Reid Hoffman, the billionaire founder of LinkedIn, said that crypto will become critical in an AI world. Okay, well, let's think about stablecoin transactions, which we had said last year was the ChatGPT moment for crypto. And you can see stablecoin volumes now exceed Visa payments. This is according to data from Bitwise. And Grayscale believes that the tokenized market is going to reach $300 trillion as we tokenize real estate, fixed income equities, derivatives, commercial real estate, basically everything. What does this mean for layer one blockchains? Well, this is Ethereum, which is in pink, and the total value locked of tokenized assets. And you can see Ethereum moves pretty closely with that tokenization, meaning that according to Grayscale, networks that host a large share of tokenized activities may capture a meaningful portion of economic value. In other words, if Ethereum is the leading tokenization platform, its price will go up a lot. And Mark Andreessen, who's a very visionary about the future, says the grand unification of AI and crypto are AI agents because they're going to need money. And we've talked about this before, that there's numerous reasons why blockchains are a better way for AI agents to use money. Okay, well, let's bring this all together.
All right. So what I don't think he outright said it here, but the thing he's kind of pointing at with the agentic money and stuff is that you can set up AI agents to do a lot of stuff as it stands currently. But spending money freely is one of the big hurdles that they're still trying to get over. And crypto is blockchain native technology, aka digital first. Everything else that we really encounter when it comes to digital money is still traditional banking systems that are just using like traditional infrastructure such as the internet, phone calls, whatever you want to say, to complete those transactions. But at the end of the day, that money still flows through the banks. It doesn't flow through blockchain. So in my opinion, what I'm picking up here is he's saying we haven't made the leap yet, but when we do, crypto will become even more important to the AI ecosystem.
I'll look at it like this. AI is the engine, but the tokenization or the freeing up of utilizing the stable coins, certainly stable coins, and crypto is going to be basically the oil in the engine to really make it run smooth and be almost streamlined where you don't even need a lot of interaction. And then with the traditional banking sectors systems, they're outdated. They don't move quick enough. And you have hours of operation. Well, crypto's 24/7. So you can already see where if everything's tokenized, now everything's liquid. I can now trade this freely, whatever it's irrelevant what it is. And you can start trading and own, you can start breaking up ownership of something into smaller segments of what that thing is, because now you may not have, you can't own the whole entity, but you can own parts of it, like a stock to a company or whatever that is for that. It could be a collectible. We're already seeing it with NFTs and how you have a section of, you can't own the entire, I don't know, we'll call it a Picasso, but yet you can own parts of that Picasso essentially as the whole, as investment. So you're starting to get into the point where now if everything is digitized and tokenized, that now becomes extremely liquid. And if it's on a blockchain, It's 24/7, and transactioning with other entities is almost seamless. It's because there's no middleman at this point. Everything just moves, and now it's just having a digital receipt of who owns those digital receipts. So yeah, everything's going to be 24/7. Everything can be tokenized, and everything's going to be liquid. There's no more holdups. I mean, especially in the real estate markets. I mean, it takes 30 days to close. Tokenization, it might take 5. And that's really just having people
Would
sign
be
some stuff.
nice.
I mean, I'm just saying that you can see things become much more liquid, and that's the piece people aren't getting. Everything's much more liquid. You said, what's the most liquid thing out there? Cash. Cash is the most liquid. If you own gold, how easy is it to sell gold? You got to go down to some place, or now maybe you own it on another platform. You don't actually physically own it, but you own that gold on a network, and you might be able to sell it. You're going to have to take a hit on that too. So it's not very liquid in the sense that I own something I can go sell. If I own, I don't know, something that might be valuable, well, I got to go find somebody to buy this thing from. Now, companies like eBay have opened up the whole world to this stuff, but still, how long does that whole process take? So you can see what I mean when I say liquid. This is going to be instantaneous how you can move stuff. And there's another caveat. You now open up the whole world to who's going to give you the best yield, or who's going to give you the best return for whatever it is you're selling. You're not going to be just limited to say, I can only sell, in this region or this country. You can now go out to the entire world now and sell everything. So you've opened up the entire world to bring them to whatever you're trying to sell or move. So much larger audience now too. Let's go ahead and dive in. And now he's going to dive into basically the most profitable financial place. This one's fascinating here, by the way.
If tokenization is the future of assets and money is becoming digital and AI agents are going to use money, well, we should think about what it means for the most profitable banks in the future. Well, today, JP Morgan is the most profitable bank in the world with 59 billion of net income projected this year, almost 60 billion, and 300,000 employees. But let's mix in 2 new types of companies, Jane Street, which just is a trading firm, and Tether. Jane Street's on track to make $40 billion this year with 3,000 employees, 1/1000th the number of employees at JP Morgan. In fact, Jane Street in the first quarter this year is reporting about 10 billion in net income. That means moving money, which is what Jane Street does, is starting to capture more value than the entire operations of a global bank. Again, going back to this chart, Jane Street makes more money than Bank of America, Wells Fargo, Citigroup, Morgan Stanley, and Goldman Sachs. Okay, and then let's look at Tether, which is the largest stablecoin operator in the world. It's going to earn about 15 billion this year with 300 employees. So 1/1000th the number of employees of JP Morgan. These are 2 new types of financial institutions. Didn't exist 20 years ago. But keep in mind, that's sort of the story, that technology, as it gets introduced to sectors, creates disruption and it reduces the value of incumbency. Now, I'm going to highlight a bunch here. Automobiles. We don't remember any of the horse buggy makers. We only think of the new entrants. With mobile, all these old names really largely don't exist. It's mostly mobile today. In digital media, nobody really remembers names like Hearst, Viacom, News Corp as the giants. They were the giants in their day. Today, it's more Google, Meta, and TikTok. Even more recently, cloud computing. Before cloud computing, there were PC names, IBM, Compaq, Dell, Gateway. They've given away to Amazon, Microsoft Azure, Oracle, Google Cloud. And finally, in EVs, these traditional automakers are still around, but Tesla is far bigger. So markets tend to overestimate the value of incumbency, and it's really the new entrants that capture a lot of that value. Well, what does that mean? I believe in the next 10 years, half of the largest financial institutions in the world are going to be native digital companies, native digital asset companies, many of them in crypto.
All right, pause that. So the Jane Street one is fascinating. So wrap your head around that. Only 300 employees, and yet here they are most profitable. Now, some would say they manipulated the market tremendously, and they've liquidated a bunch of shorts and longs on leverage. That's probably where they've made most of their money. Let's just call it what it is. They've manipulated the market when the crypto market's very small. So I'm not saying that these companies, like he's suggesting, aren't going to come to rise to power. But I would take a different approach. I think there are going to be very attractive companies that are rising up to power, but I think these big institutions will be trying to partner or buy them before they get to be competitors. Now, Jane Street's a little different. It's probably already out of the bed. It doesn't need to partner, doesn't need to do anything. It's already off and running. It's lean, so maybe it doesn't need anything. Because, you know, honestly, with these new disruptive companies, they have such a small employee base. You know, obviously they don't need to partner. I mean, why do they care about the dated companies, these dated financial institutions? Well, maybe because they've got the customers, right? Maybe it's because they also have products and things that they can leverage and make them 10 times better. But I can still see a lot more partnerships and things coming up. But that's going to be an interesting thing that's going to transpire. But I think that is fascinating that, and keep this in mind, UST, you know, Tether example and USDC, they're using the stable coins to gobble up treasuries, essentially, aka buying bond US debt. They're buying that kind of stuff up. So is it truly, you almost have to ask, I'd have to learn to look at it. Is that, are they really making that much money, or is it they're just taking on US debt and some type of an extension of the government? I don't know. You know, I'd have to dive into that one a little bit more to really understand how they're profitable as much as they are. But Jane Street, we already know at Jane Street, they're the big boys that have manipulated so much stuff out there. It's disgusting how bad that they've
out of
manipulated.
India for it.
Yeah, exactly. They did get kicked out. Yeah, they did get banned. So but that comes back to what I'm saying with, you know, regulation. And that's the other problem you're going to have with crypto is crypto's borderless. So, okay, US comes out and says, oh, we can't do this. Well, there's going to be a bunch of other countries that are going to be more willing to do that, and they're going to be more profitable. So what he's saying is not too far-fetched potentially that you will have companies, because they're not going to have any, they don't have to answer to anybody. Let's say an institution's operating in say Russia or China. Do you think they're going to answer to the U.S.? No, they're not going to look at anything in the U.S. got to say. They're going to be running wild because they have no limitations of what they can do. So yeah, I could see them being very profitable. But what that also brings to the table is a much more volatile crypto market, because it's such low market cap. And Jane Street's just a perfect example of that. So I think if anything, markets are going to get manipulated. And this is why I keep thinking, you know, maybe the 4-year cycle is dead, or because TradFi is going to make sure of it, or maybe they're going to keep pressing the prices where they're going to just, you know, piss off the bulls and piss off the bears at the same time. So I don't know. We'll see.
It's possible. We'll see.
And finally, let's talk about BitMine. BitMine's been building in the crypto winter. The first thing we did was invest in ACO, which is an intersection of AI and identity. It's a publicly traded company, ticker ORBS, and one of their biggest assets is their holdings of WorldCoin. WorldCoin is helping verified humans to prevent networks and systems that we use to be polluted by digital bots. I mean, take a look today. Basically, from everything from Polymarket to web traffic to emails, even to X.com and Reddit, are really starting to see more of the volume come from non-humans.
Correct me if I'm wrong. Was WorldCoin the people that were trying to get people registered on the blockchain with retinal scans in 2022?
Yes, absolutely, because it's all about fighting, you know, the bots. And this is the ones that were pushing the KYC so hard. Exactly. That's the WorldCoin. Yes. Yeah.
Is it
that was that.
nightmare fuel? Yeah, good bit. Do I understand
think you're
it? Oh, yes.
You're in a problem here where, yes, the bots are running rampant, and yes, they're trying to solve that. You coming out there and saying, well, everybody needs to be everybody has to be KYC'd, everybody across the board. Well, once again, it's borderless. Other countries are going to be like, no, we're not doing it. Sorry. So to get everybody to agree to it, it ain't going to happen. But what I'm saying here on this presentation is he's outlining that there's a big problem there, obviously, with the amount of traffic on the internet and how it's mainly all bots. And that's only going to get worse with, you know, the more intelligent bots becoming smarter. So
true. All right, let's keep it going.
In fact, Reddit wants to consider using Face ID for human verification. ACO owns a stake in OpenAI, WorldChain, and Mr. Beast. So think of it as very similar to a company called Fundrise, ticker VCX, whereas Fundrise trades at 6 times NAV, ACO is undervalued. The second is BitMine launched Maven, which is the largest single staking operator in the world. We launched commercial service at the end of March of this year. We have more than 14 billion of assets staked, and we're staking about 2 billion of client assets currently, including other tokens, Hyperliquid and Solana and Canton. As you can see, the staking operations are generating quite a lot of rewards for BitMine. Over 300 million today, but on track to be 352 million once we've fully staked. We also invested into Mr. Beast. I've talked about that before, but he is the largest content creator in the world, but he also bought Step Financial to turn it into a financial services company. I think for Gen Z and Gen Alpha, he's going to be the Robinhood, SoFi, and Chime combined.
This one is interesting to me.
Yes.
Is this an aggressive play? Yes. At the same time, though, hear me out. I know I'm an unk over the age of 30 at this point, but I don't know if Gen Z and Gen Alpha like Mr. Beast as much as they think that they do.
I think they're looking at, obviously they're looking at how much influential numbers he has. They're looking at the data, the analytics, instead of maybe the consensus. Like, keep in mind, Mr. Beast has been building out a dominant platform. He's got a show now, the $1 Million Show on Amazon. So he's, and they're running their analytics. They can tell you how many people are watching this stuff and how many people are there. So they're looking at it specifically, like that's it. But you look at what they're looking at, like which products are targeting which folks.
That's
You know
the
what I
much
mean?
more interesting angle for sure.
Right, it is. So
they're spot on this one.
yeah.
Is
So
like baby boomers. Oh yeah, Charles Schwab. That's their boy. For Gen X, Blackstone, BlackRock. Yep, that's them. For all the millennials, Robinhood, Chime, SoFi. Yeah, that is millennial all day long. As far as Gen Z, Gen Alpha, honestly, I think they'd be better off by going and looking at like DraftKings or other sport books or Polygon.
Sure, they could do that route, or they can go after other influencers that are dominant. Yeah, they can go. But what I just think it's interesting because they are starting to build out a marketing campaign on who they're targeting. I think it's interesting.
Yes, I can see the thought and the research that has gone into this, and I can understand how they have arrived at the conclusion. I just maybe happen to disagree very slightly. But overall, the everything else above that, yeah, 100% spot on. No arguing on that one.
And of course, there's a huge wealth transfer coming for Gen Z and Gen Alpha. We uplisted to the NYC Big Board.
Pause that part right there, because what he's talking about, the transfer wealth. So what they're talking about is you have a massive amount of money that's coming down from the baby boomers. And from, I mean, you got, yes, you have Gen X, you got millennials, but what they're saying, generational wealth, those baby boomers are starting to pass away. Money's starting to trickle down. Even from Gen X passing away is trickling down. So that's why they're trying to be more proactive, not just hitting one demographic. They got to hit them all, because there's going to be a transfer of wealth. That's the piece you need to understand here. And that's with any type of stuff. And with that comes your marketing campaigns are totally different targets. Nobody's getting their information. Like, listen, millennials and Gen Z are not getting their information, or even most of Gen X is not getting their information from mainstream television anymore. They're not. They're going after, whether it's streaming like this or basically alternatives to regular television. That's what people are utilizing. So they have to transfer with the times, and that's why they have to be prepared for that when that generational wealth transfers over. So it's fascinating. It's good strategy.
All right.
Gen Z and Gen Alpha. We uplisted to the NYSE Big Board. That's a pretty big deal. And finally, we reached 4% of the Ethereum total coin supply. BitMine was created on June 30th of 2025, and the first 1% of the Ethereum supply came in August. And as you can see the different milestones here, on April 10th, we reached 4%. Now we're at this pace, we could reach 5% very quickly, but we actually want to slow the pace of accumulation. But we still expect to reach 5% of Ethereum sometime in 2026. And as far as
keep this in mind,
goes,
pause that now. Keep in mind, they've been buying since June, so they're underwater. Obviously, they're underwater quite a bit because they were buying in June. Prices are at below the June prices, and it's below all those other entry points that they bought outside of maybe what they bought in April. Yeah, what they bought in April, they're probably right around break even right now. But everything else that they've been buying, they're underwater. So keep that in mind. But he'll also go in here and talk about their performance too, and what they're doing to hedge against the price action. So it's actually pretty interesting too.
Interesting. All right.
For digital asset treasury, so we're going to track the price of Ethereum, but we want to outperform Ethereum. For instance, in 2025, Ethereum was up 22%. From June 30th to year end, Bitmine rose 500%, which means it outperformed by 48,000 basis points. So far this year, Ethereum's down 18% and Bitmine's down 15%, so it's outperforming by 310 basis points. But of course, if Ethereum goes up, so should Bitmine's price. The correlation is still around 90%. So recall those price targets we had. 22,000 for Ethereum, 62,000 for a payment rail, and of course, 250,000 using both Joe Lubin's price target for Ethereum and Securitize's recent price target for Ethereum. Well, that would value Bitmine's shares at 500 at 22,000, 1,500 at 62,000, and 5,000 per share at 250,000. So you can see quite a lot of upside. That's it for now. Thanks for listening, and I'll speak to you soon.
Okay. I like Tom Lee. I do. I think he's visionary. I think he gets it. The last 3 minutes there, that is investor bait with price targets of going to the moon. So for me, that was the equivalent of everyone saying we're going to $250,000 Bitcoin in the last cycle. And clearly we did not do that. But that's even higher than that. Do I understand his larger point, though, which is that are they largely tied to the price of Ethereum now? Yes, for sure. I think some of their outperformance between, he said, June of 2025 and December 31st of 2025 as a 5,000% growth. I'd argue a lot of that is honestly just the startup buildup and seeing that, oh, yeah, these guys are actually serious about trying to buy up 5% of the supply. I don't know if they're going to outperform by 5,000% the Ethereum price again. If anything, I would argue they might be lucky to get maybe like, I don't know, 10x the Ethereum price because they're so heavily invested in it at this point that it's just going to take up the vast majority of what they bring in because it's just going to start to outcompete the rest of the business to a degree. They're really just reliant on that. So the one thing I'm actually confused by is he said it towards the end there, which is that they are looking to slow down the price of accumulation. Why?
Right.
Why?
So, well, he states in the video about it, you might have missed it, but so they're slowing it down because they already got 4%, but they're looking to accumulate the next 5% before the end of the year. Like they want to have 5% by end of the year. So they're slowing down because Tom Lee has also come out and stated before, he also sees a pullback in the Ethereum price. So that luckily, like I said, they held off, they're buying, they wanted to get that initial capital in. Now they want to, buy it up here. So they think that you could get lower prices here at these levels here. So that's the other thing.
Hear me out though. He started off the presentation by saying crypto spring is here. If crypto spring is here, doesn't that mean that it's the start of something bigger? If that's the case, then the answer is we want to get from 4% to 5% immediately to capture the lowest prices we think we're going to get.
I would put it this
Granted,
way.
could be a funding issue, but
I think it's more about a risk management. Like you already got 4%, you've already backed up the truck. You have essentially what would we say 20% of dry powder still left from what you want to do. So they want to be a little bit more cautious on when they're spending that dry powder is how I look at it as, because just in case it does go down, they want those lower prices because they've already capitalized, they've already put 80% of their dry powder to work and aggressively buying. And honestly, they were just, buying up at higher prices. So right now, why be more aggressive on that? But if they're still talking, by the end of the year, which cycle lows would put you in, like we said, cycle lows around Thanksgiving, and then early cycle maybe around early October, give or take a little bit there. But those would give you kind of an idea where your lows could be coming in ultimately. Yeah, and that's the other thing. So keep in mind when he came out with this, that came out he released that to his folks back in beginning of May. So yeah, ETH price pretty much has gone down from that point. So the whole 3 month in a row thing, green candles, that's out the window. So we could still have a next leg down, or we could chop sides. Who knows at this point? But what I'm going with it on is the things that I find interesting were the fact that some of the big financial institutions are starting to get with a fraction of the employees are outperforming those traditional companies in TradFi. That is eye-opening. That's a trend you're going to see them go after, and they're going to be more willing to go after. Well, what are they doing? Well, they're going out there, and then the next thing is going to be the expansion with tokenization coming and making things speed up. So that's the part that I'm a little interested more about in the presentation, and of course the price targets. And I get it. I get the ratio, but do I think Ethereum's going to get 25% of Bitcoin? No, I don't think it's going to get that high. And if it does, it won't be in this time frame. And if it does, I'm certainly not going to be upset. But I think it's going to high. No, I think the ETH BTC ratio, I think we'd all be happy if the darn ETH BTC ratio got back up to, say, 0.4. We would be ecstatic, because then at least it's returned its downtrend. It's been in this downtrend for quite some time. You got to go all the way back. There's been a downtrend in that ratio price. God, I mean, you're talking about going back since the September of 2022. That's back when it was at 0.085. I mean, if Ethereum gets back to that levels, yeah, that itself is going to be amazing. Hell, if it even gets back to half of that, it's going to be amazing. So let's take everything with a grain of salt, and keep in mind time horizons here. I don't know if you noticed the time horizons that he put out there with the dates too, though.
What do you say, like 2040 or something?
No, they were thinking like, they're talking like not necessarily those ratios, but if this adoption happens with real world tokenized assets starts kicking off, most of the people that are aggressive in this are thinking it's going to happen over the next 5 years. You could see just a monster move.
I could see a monster move. I do remember he said $250,000 Ethereum, and I'm pretty sure he said by the end of 2026, but to give him a benefit of the doubt, I'll just presume he said at the end of 5 years. Even then, that is, I think that's still a little high.
I think his numbers are a little high as well. But that's what I'm looking at. I'm like, hey, those are great forecasts. I'll take half of that. I'll take, he's talking about ETH. I mean, if ETH got between up to 12,000, which is the low end of what he's like, if he gets into 12,000, I mean, that's fantastic. 12,000, 15,000, that's a little bit more in line with I think a lot of people were thinking. If the ratio could start to turn back around, get back to that 0.04 level, and the ratio, and of course Bitcoin would have to make that run up, the next run up, getting to that $250,000 range for that to kind of happen. Those are the things that would have to happen to see those kind of numbers.
Yeah,
but reward asset tokenization could absolutely be that fuel that would catapult it. That's the thing that would catapult it.
I'm right there with you. I think tokenization is the big one. That really is going to be the merging of crypto and the real world. Because at this point, crypto has largely stayed on the blockchain. Granted, yes, you can use it to, get money in and out. Maybe if you find certain people, you can pay for things in crypto, which is super cool, but still super rare, unfortunately. So actually getting tokenization of real world assets, I think it's going to be one of the real big buy-ins. And in order to get that done, I mean, I hate to keep talking about it, but Clarity Act, you got to get it done. You got to get that passed. We got to get baseline rules going so that we can actually build this out. Till then, it's still just going to be a dream.
Well, I know there was that tweet that Trump put out just recently, like a day or 2 days ago, saying that they're going to be pushing aggressively on this. But, it sounds great and all, but get it done. I'll believe it when I see it.
Correct.
And of course, there's certain key Democrats that are holding it up supposedly, and I'm sure there's some deals going on back on the closed doors. There's probably all types. Because that's the one thing. If there's only a few Democrats that are holding this up, and the reason I'm pulling at the Democrats because they've got pretty much most of the Republicans locked down that are agreeing to it. Even though it got through the banking committee, there were some people that were stating like, I'm not necessarily going to vote yes for this on the Senate floor, So there's still that. But whoever those folks are that are keeping them from getting to their 60, it's like at this time, as those politicians, they could pretty much ask. I'm not going to say anything, but they can ask for a lot of things and probably get it here because they can hold that much leverage. And now what I'm saying is like whatever they promise their voters or whatever they're trying, what they're passionate about, what they're trying to get done, whatever that is, they could probably get the support to back it and make it so in their area, because if there are only a few people holding it up, then like I said, deals can happen, but we shall see.
True. Alrighty, tell you what, I did want to get to this, but I think we are definitely out of time. I did have a fun little article here for you. Representative Al Green actually got ousted in a primary for the Democratic Party in the state of Texas. Granted, yes, it was around the city of Houston, so a largely Democrat-held area. So odds are whoever won this is probably going to be the the actual representative for that area. And in this case, it looks like it's no longer going to be Al Green, who was on the House Financial Services Committee and was notably anti-crypto. The new guy, very much pro-crypto, and actually was backed by a pro-crypto super PAC that dumped over $5 million into the race that actually helped turn the tide and get it done for that guy. So I'll be posting this article inside of the Telegram, and then I will also do a quick hit on it for all you good folks in there. And by the way, if you would like to see this and more, you can get in there by heading on over to walktheblockndf.com. From there, you can find our membership page and go ahead and hop into the private Telegram. Inside of there, you're going to find the backlog to all of our video archives, the entire rolling chat with all of your questions answered, all the latest and greatest research and news that we are keeping track of. And like I said, all the questions, answers that you could possibly want, including fun live streams like we're going to do shortly. Additionally, we've been talking a lot about real world assets here. We're going to be doing a real world assets stream, and there's even a fun little murder mystery that's kind of going on right now with, I believe it's Ondo Finance. They are some real big RWA folks, and unfortunately, their founder did pass away, and we have absolutely zero details about the man's death. So it is still absolutely tinfoil hat conspiracy theory territory, but bit of an odd note. So there's your little juicy bit that's going to be part of that to keep you entertained while we talk about what it means to get in on the real world assets and tokenization. Outside of that, though, yes, folks, around here, we like to say the waters get rough, so don't sail through them alone. Come join us as we navigate digital finance together. Private mentorship, exclusive live streams, Q&A. Go from beginner to intermediate to expert with us. We all work together. We can all win together. Alrighty, we are going to be wrapping it down here. But before we do, I do want to give some shout outs. We got some good friends that were stopping by for the show, and I appreciate all you guys. Mr. Moon Pilled Rational Optics reminding folks to hit the like button. And yes, if you don't mind, do us the YouTube pleasantries, even if you're catching it on the replay. We'd love to see Replay Gang in the chat. Marcus72 saying, what up, all? Good to see you, sir. As always, thanks for stopping by. I know you've been super frequent. And we got good buddy of ours from the DGen Roundtable, Mr. Will Stevenson. He says, like that smash button. Again, the YouTube pleasantries. Good to see you, buddy. Hopefully, we gave you some good content to farm with the Tom Lee clip there as well. All right. That pretty much does it for tonight. Tracker, any final thoughts before we get out of here?
Yeah, I'm looking forward to the membership streams we're going to do on the real world assets. What we're going to be doing is basically connecting the products that are out there to show you guys how to navigate through it all, how to make the connections, and also go over some of the best, what we think is the best plays in that area as far as the most potential, the most exposure that you're going to get. Also diving into not just that, but some other videos too that are going to probably dive into it, that we're going to like to explain what is going on. I know Tom Lee did a pretty good job explaining a little bit about that, but there's a lot more to it than just that. So we want to get into that area as well. So that's going to be a fun one to get into with. I would say probably the other thing, really just digest this market, look more to long-term horizon. If the lows aren't in, everyone's thinking, are we going to get to that 40 or 50K? And I think the answer is, I don't think you're going to get down that low. I think the institutions and people are going to be buying it up. I think that 200 weekly moving average is going to hold strong. Now, can we go below it? Sure, we go below it. We did during the FTX debacle. I would also say you need to be looking for large, massive candles. Daily candles. Like, that's your big capitulation moments when you see that. That's something that I've noticed as a trend that's been going on, not just for, a reversal of the down, but also reversal on the tops. That seems to be something that's been playing out for quite some time. Obviously, there's more to it than just that, but that's something that I was noticing. Like I said, I was putting dry powder to work today. I'll keep doing it as well. If it wants to keep going lower, I'll be more than happy to keep injecting more capital. That's not a problem. I've got, probably a 2-year supply of dry powder constantly coming in. So I have no problem. Just keep deploying it. I have no problem whatsoever. I'm still looking at the long game. Even if Tom Lee's numbers are astronomical, I would say if they come in on the low end, you're going to be doing very well. But like I said, the other stuff's going to be really interesting in the real world assets. A lot of good, interesting stuff we're going to be diving into. So I'm looking forward to it. Also, that's pretty much it, man. That's it. Don't get all stressed out about everything. Risk management. Make sure if you got dry powder, you've got some on standby, and try to take capital, put it to capital to use, man.
Well said, sir. Yeah, we're in this for the long term, and not going to lie to you guys, 2026 might get a little rough when it comes to price action, but if you have your eyes on the horizon, aka the future, looking longer than that, this could be a decent year to weather the storm and figure out something to do. But again, nothing we say here on YouTube is financial advice. So with that being said, folks, like I mentioned earlier, for technical analysis, 60-day cycle low, I'm looking at sometime in the next week, pretty much next Thursday. And the price I'm looking for is $70,500 Bitcoin. That is what I got going on. But we will catch you guys next week to see if the crystal ball is correct or if, yet again, TA is just astrology for dudes. But regardless, we thank you all very much for spending your time here with us. So with that being said, we'll catch you guys in the private Telegram, and we also catch you guys here on YouTube next week for our live streams, 9 p.m. Eastern time, as always. Until then, I hope you guys have an excellent weekend, and I will catch you later. Bye-bye.